Thank you very much for staying on the marketplace. Welcome back. Omni Bank and Sahel Bank are said to be in serious talks that could end in the two companies merging their operations. Joy Business understands that discussions are far advanced, with an announcement expected in the coming days, even though one of the two was part of earlier merger talks with GN and Premium Banks. George Wiafi has more.
Joy Business understands a formal request has been sent to the regulator for its approval before the said announcement can be made public. We understand the move has been influenced by challenges in meeting the new capital requirement of 400 million Ghana cedis by December this year. It is, however, not clear for now what this will mean in terms of earlier reports that GN Bank was in talks with Premium and Sahel Bank, or Sahel may have gotten out of that negotiations, and GN is now looking for other partners. Based on the 2017 accounts of Omni Bank and half-year results of Sahel Bank, the two financial institutions would have a total asset of about 1.2 billion Ghana cedis and total branches of 39 when this merger is completed. Sahel Bank has a stated capital of 71 million Ghana cedis as published in its financials ending June this year, whilst Omni, as at the end of 2017, had a stated capital of 141 million Ghana cedis. Put the two together, that should be around 212 million Ghana cedis, still short of the 400 million Ghana cedis required by the end of this year. Sources say some other banks are in talks that could result in bringing together about 3 or more banks with a proposed name of Amalgamated Bank.
In other banking news, some local banks are said to be under some sort of pressure as a result of the current challenges facing the sector. Sources say this has resulted in panic withdrawals from these institutions. But is this a situation getting out of hand, or something else could be done to immediately reverse the trend? The following Business Desk report has more.
For some of these local banks, a day would not pass without a customer making enquiries on their investments or accounts. Speaking to some of these banks, they say their position has been worsened by the recent collapse of the 5 banks, all of which are local financial institutions. According to them, this has given the impression that all the local banks are not in good position, or let's say not healthy. However, this has been rejected by some of these local banks, especially those in good standing, who have been arguing that their financial statements for last year and even half the year should demonstrate that they are not in distress and are indeed abiding by good corporate governance practices. One individual that can be described as, quote, high net worth client, and quote, for instance, has told Joy Business because of the current happenings, he has closed his accounts with about 3 local banks and moved it to one of the big foreign banks in the country. Sources say government decision to move its account held with the commercial banks to the central bank has also complicated issues for the local banks that were depending heavily on these deposits for their operations. We also understand that one of the biggest local banks in the country recently had to rely on Bank of Ghana for some emergency liquidity support of it to stay alive. Checks with the central bank show that out of the 30 commercial banks that are in operation, 13 are local banks.
Still staying within the banking sector, the Institute of Internal Auditors Ghana has charged external auditors to collaborate with internal auditors to ensure that firms follow controls and comply with accounting standards. According to the president of the institute, strong collaboration between internal and external auditors is likely to halt the breaches by management, which led to the collapse of some 7 Ghanaian-controlled banks. Here's president of the Institute of Internal Auditors, Juliet Abwajiriafi.
In theory and in practice, you should see the internal auditor because he or she sits in the organization and may have done a few things that you don't even know of. So it's better you see the internal auditor. And don't forget that most of us are colleagues. You know, I'm a chartered accountant by profession, and I have done external auditing before, and I'm doing internal auditing now. So it is proper that at least you talk to your colleague, the internal auditor, to understand and appreciate what the issues are. And then you decide whether you want to place some reliance on their reports or not. Because external auditors come in basically to do financial audits, most of the time they overlook the other aspects of what they do. But they shouldn't forget that procurement, all the other activities that we have in organizations, yes, you end up paying monies, for those things. So I think sometimes they shouldn't just look at the financial bit and then go away. They should understand the business of the organization. It's important.
Is that to say that these external guys, when they come, they're just looking at your financials and they give an opinion on it without, going beyond what the day-to-day running, where the internal guy probably is auditing through all those processes?
Yeah, because they come in for a short period. They cannot do day-to-day. So the internal auditor, that's why it's important that at least you talk to the internal auditor to understand the business. Sometimes they come in and then they just do some risk assessments, and then they go on and then they do the financials. That's what happens.
This is very interesting for me. Is that suggest that probably even the external auditors are not doing companies good in terms of the kind of audit that they do? Because, you would agree that sometimes they charge huge sums of money. And if you come and you are just looking at financials, then what exactly are you doing?
Oh, I wouldn't say that they are not doing anything good. I think they are doing some good. They are doing a lot of good, but they have to do more. They have to do more. Because if you just come in and then you do one or two, assess the risk that the organization faces, and then you move on to look at the financial without really understanding the business, then I think you have to look at it again.
Could that be the reason why we're facing what we are facing today in the banking sector and other businesses or firms that probably have collapsed, and later after the collapse you get to know that there were more rot than ever within these organizations?
Most of these auditors have done these audits over a number of years, so I don't want to say that they don't understand what they are doing. But I think from the little we've heard, it's more of a governance issue. It's more of a governance issue where they've come in, they've done their work, and people who are responsible for the organization have failed to do what is right.
Meanwhile, President of the Ghana Association of Bankers, Alhassan Andani, has called for a new regulation which will prevent individual majority shareholders from being part of top management of firms they have invested in. It has emerged that interference by individual majority shareholders of liquidated banks in management positions may have partly contributed to their collapse. Speaking to Joy Business, Mr. Andani noted the said separation of shareholders from management will help prevent conflict of interest situations.
The firm is a legal entity that has obligations, and you as an individual, with your shares in the institution or the bank, have your personal ambitions. Now, to the extent that your personal interest is almost reflecting the interests of the firm, there can be massive conflict of interest problems, and it probably is prudent not to allow that. Probably not prudent to allow people with significant shareholdings to also run these institutions. However, it has to do with the level of governance around the management of conflict of interest. If you look at your Warren Buffetts of this world, they run global companies, but they wouldn't, and they have massive interest in these companies. But governance, management of conflict of interest, and best practices are employed, and therefore it's very transparent, and you don't see the personal interest overriding the interest of the firm. Because remember, in the firm, people have voted for you innocently. Depositors have voted for you innocently, and their interest is paramount. So if you sit as a majority shareholder and just looking after your interest, you might overstep that and then impact other parties who have also a stake in the firm. So it's probably not prudent to have that situation. But again, rules must be there for managing conflict of interest and enforcing conflict of interest situations.
Yeah. Meanwhile, the Industrial and Commercial Workers Union, ICU, is supporting the call for the Bank of Ghana to prosecute all top management staff of the defunct banks that have been consolidated. According to the General Secretary of the Union, Solomon Kote, the relevant state agencies should be questioned for their roles in the collapse of these banks. He spoke with Joy Business in an exclusive interview.
ICU is pushing that all those top management who supervise to the point of where the bank has become insolvent should be dealt with according to law. They can't just superintend over the business and see huge losses that has been splashed on the face of Ghanaians. And indeed, if the Bank of Ghana is paying any money, it is your money, my money. It is our tax money that they are using to do that. So the Bank of Ghana should take another stance of pulling those people to ensure that those bad loans they gave are recovered. Now, to your question directly, they may not get job, yes, because you were part of a team that only supervised a bank to become insolvent. It means you are not competent. It means you are not there to actually salvage what was entrusted into your hands. Then again, we've seen a report that came from the Capital Bank issue. And if the report suggested that Capital Bank went to the drain because directors took loan, senior men took loans that were not properly clothed with the collateral that is deserved. Okay, if similar thing had happened under these 5 banks, what should happen to those people? Are we saying those money have gone and they are bad loans, bad debts, and therefore it should end there? No. We want to encourage the central bank. If there's a way they can push and make sure we get the recoveries, we get their monies back.
Also on the marketplace, now we would like to throw some of these emerging banking issues before banking expert and lecturer at the Ghana Banking College, Dr. Richmond Etuahene. My colleague Ebenezer Sabuti is with him now, and we're linking him live for some further analysis. Ebenezer. Hello, Eben. Hello, Eben. Can you hear me?
Hello, Abaji. I can hear you clearly. Here we have Dr. Etuahene, and as you all know, there. Hello, Abaji. Yes, I can hear you. Yes, we have Dr. Etuahene here. We'll link up with him, as you said earlier, because the issues in the banking sector has been lingering for long, and we'd like to have his thoughts on that. So, Doc, welcome to the marketplace.
Thank you very much.
First of all, this is what the Bankers Association president is saying, that shareholders shouldn't be allowed to take management positions. Your thoughts on that first?
Thank you. I think he's just reiterating what the new corporate governance directives by Bank of Ghana says. It says categorically and clearly that anybody who has anything to do with a defunct bank or collapsed bank cannot hold any responsible position in the financial sector, which to me is one of the best practices in the world. You don't go into a trade and destroy it and come back and want to be part of the trade. So I think it's a very good thing in this industry.
But being a manager, what contribution do you have? I mean, when it comes to growing a bank or destroying a bank, as compared to being a board member. So when the person is a manager, how does it contribute to that as compared to being a board member?
Thank you. One, at the end of it all, if it's even money, or LC business, it's the manager who does it. So you have the ethical and moral values that this thing that I'm doing, it either destroyed value or create value. So you must be able to stand on your ground. If it is not ethical that I'm being told to do this, you must say, I won't do it and lose your job, because that is better. Rather than towing a line, becoming a captured, we call it captured. You become a captured person, you do it, and then some years to come, you'll find out. And you can also be charged like other people are being charged.
So when this continues, what should be the response from the governor or the central bank? Because they are the regulator of the,
I think what I will say this afternoon is that it's all about enforcement. Once we have these directives, we must apply it to the letter. That if you have done it, we have a register there, or records, those who have caused the demise of banks. Their names are there, their status are there, so that they cannot have access to do it again. We need to have enforcement. I've been saying this and this. One of the biggest challenges we have was lack of enforcement, weak enforcement. We have fantastic regulations and law, but nobody applies it. So once Bank of Ghana agrees that this is what they have done, now they should have a system where to stop people from participating in management.
Does it suggest that you believe the core? People are saying, okay, the supervision department should be a separate entity so that they can be able to enforce some of these rules, strictly.
Whether it's separated like the Prudential Regulatory Authority in England, they still have power, so they can still do it. But what I agree with you is that a time is coming, or it has come, that we must look at a whole regulation as been done in Kenya and done in South Africa, where we separate this and create a new institution. What they have done in England is very simple. They have taken the prudential regulatory to come under Bank of England. However, it comes under the body of Bank of England, but it has its own rules and regulations. They are not doing monetary policy and at the same time looking at it. Somebody's job is to look at the Prudential Regulation Authority. And the other one is Financial Conduct Authority, where people do insider dealing. Because some of these transactions have gone into insider dealing, which is criminal in the UK. So if we look at the regulation, we may have to look at a regulation and adopt a new regulation to address some of these challenges that we have.
So the question is, these challenges, what are the risks it poses to the industry, apart from having the bank going down? What are some of the risks that it poses to the industry?
You'll be surprised to hear that credit to private sector declined from 38% to 14%. What it means is that the credit to the private sector has gone down, meaning that the economy, which is the private sector is the engine, we keep on saying is the engine, but if it's not getting credit, how can the engine turn? So all these things have ramifications and implications for the whole economy, not only banks, but about, or even the government policy that one district, one factory. Now, the banks have gone, so who are going to support you? So it has a serious implication for the whole economy.
One other implication, very big one, that our Joy business we are picking up is that it is having effect on banks' deposits, withdrawals, and other, so to speak, panic withdrawals. What will you suggest should be the regulatory response from the central bank or the regulator to this issue?
Thank you. I think once all the time, they should be coming out with assurance. Assurance. Somebody should say it as the panic is coming in. Somebody should say, don't panic, from Bank of Ghana. Either the PR department or somebody who would every morning or even appear on some of your programs to assure people that there is no need for panic because Bank of Ghana has taken the necessary strategy to address the panic withdrawal. So somebody somewhere needs to be talk as you're speaking about it. Their job is to go to the radio station or TV station and talk and conscientize people that they should not panic because their monies are safe. We are human beings. We are human beings.
Okay, thank you very much. So as you can hear him, Dr. Echwahini, speaking on the banking issues. Back to you, Abuaji, in the studio.
Thank you. Thank you very much, Ebenezer Sabuti. Ebenezer Sabuti has been speaking with a banking consultant and a lecturer at the Ghana Banking College, Dr. Richmond Echwahini, on some of the emerging issues coming up as the Bank of Ghana continues to pursue banking reforms. Now, away from banking, over 20,000 farmers have been equipped with the Integrated Soil Fertility Management ISFM technology, which predominantly reduces the environmental unfriendly slash and burn farming practices. The project also helps to increase productivity and incomes through the use of good agronomic practices and the use of high-quality seeds. Africa Ghana, which undertook the project with funding from Alliance for a Green Revolution in Africa, AGRA, will launch the report in Accra tomorrow. And, of course, I've been joined in the studio by the project manager of Africa Ghana, Hazel Hasford, to give us some foreknowledge of the particular technology before it is launched. Good afternoon, sir. Welcome. Good afternoon, madam. Welcome to the marketplace.
Thank you for having me.
So my first question to you is, what is the ISFM technology and why did you target the Volta region?
Okay, thank you. The ISFM is purely managing the soil fertility to be able to get more yield. And realize that in the Volta region, our farmers there were slashing and burning the forest to get more, to go into new green lands where you can get more fertility there, because after planting or cropping the land for a long time, the nutrients goes down and they will want to go into a more greener place or land to affect this, to get a better yield. So with this, they were deteriorating the forest areas. So we decided that, okay, let's come in with the funds from AGRA. Let's come in and help them manage the soil well so that they can, from the same piece of land, they can get more yield. So they don't need to go to the forest areas to burn and get more yield from there.
Now, you would agree with me that this slash and burn, practices or farming practices, even though is not environmentally friendly, has been with the people for a long time, and so adapting to a new technology will be quite different or difficult for them. How difficult was it with these farmers you targeted when you were trying to?
It wasn't difficult at all, because they realized the higher increase in our technology that we are promoting to them. So there was no need to go back to the slash and burn again, because after slashing and burning, you lose some of the nutrients, some of the organic, and the worms and other things that helps in aerating the soil. So when we brought in our technology, they realized that they were getting more yield. So no farmer will go back to a lower yield if you can realize the higher yield.
When you say more yield, how much output, for instance, is obtained out of this ISFM technology as compared to the slash and burn?
Okay. Previously, they were getting about 3 bags, which is 50 kg
per hectare.
Per hectare. Now they are getting about 8, 9 per hectare from the same piece of land. So that's, no farmer would like to see such a thing and go back to the old ways of doing things.
Oh, that's quite significant. So apart from this, what is economic value, and how would you replicate this, countrywide?
Yeah, in terms of economic value, we've realized that they are increasing, their income are increasing, and they've been able to support their families in terms of education, health, and better standard of living. So we are also urging our development partners on board to help us replicate this in other regions, because this is catching on so well. Farmers have realized high increase in income, and their standard of living are also increased well.
Which stakeholders did you encounter apart from farmers during the implementation process?
We use the seed producers, input dealers, other NGOs like CRAN. We also engaged aggregators who they come on board to buy the products from the farmers in a wholesale form. We also build one-stop centers for the farmers, because from the increased yield that the farmers were getting, it created a demand for a storage area. So we built a one-stop center, our 10 one-stop center, where we have an input shop, a meeting area, a warehouse, and a library for information. So the farmers now have a place to store their produce, where they used to store in their bedrooms, which is not healthy. Now they have a place to store their yield, the increased yield. They have a place to store it, and they have input shop where they have closer distance to access their inputs.
Right. So quickly, before we go, how do you hope to sell this idea to policymakers, agri-policymakers, so they buy into it and make sure it is being conducted countrywide?
Through our lessons learned and our impact evaluation that we had, and we'll be sharing it tomorrow, they will realize that we've had a significant impact from this project. And farmers, a lot of success stories where farmers have testified as to what they are getting from Africa, our intervention. So we urge all donors, all partners to come on board, to come and partner with us with this innovative way of farming.
Thank you very much for your time, Mrs. Edith Hazel. I beg your pardon, Ms. Hazel Hasford is the project manager for the Integrated Soil Fertility Management Technology Project, and of course the project will be launched tomorrow at the Alisa Hotel. And on that note, we wrap up this afternoon's edition of the Marketplace. Many thanks for joining me. My name is Emmanuel Abuaji. Have a good afternoon.